Welcome to the Explainer. Okay, so ExxonMobil just dropped its latest earnings report, and honestly, the numbers are telling a really fascinating story. So today, we're going to break down what those numbers actually mean and how they reveal this energy giant's massive bet on the future.
All right, let's jump right in. The headline here is that ExxonMobil really came out swinging, beating Wall Street's expectations on a couple of really critical metrics.
First up, we've got earnings per share, or EPS. You can just think of this as a company's profit boiled down to a single number for every share out there. The experts? They were expecting about $1.63, but Exxon delivered $1.71. Now, I know that might not sound like a huge gap, but trust me, in the world of high finance, that's a really clear sign of strong performance.
And the good news for Exxon, well, it didn't stop there. They also blew right past the revenue forecasts. They brought in over $82 billion when the market was only banking on about $78 billion. I mean, to put that into perspective, that's a $4 billion beat. It's a huge signal that the company is really firing on all cylinders.
So, what's behind these pretty impressive numbers? Well, according to CEO Darren Woods, this wasn't just some lucky quarter. Nope. This is the result of a long-term strategy that they kicked off way back in 2018. The whole goal was to reshape the company from the ground up, make it more efficient, more tech-driven, and it looks like now we're finally seeing the payoff from that big transformation.
So how'd they do it? Let's take a look at the operational heart of their success. It really boils down to two major assets that are just performing like absolute rock stars.
On one hand, you've got the Permian Basin right here in the U.S., which hit a record 1.8 million barrels a day. And on the other, their offshore projects in Guyana are just surging, hitting almost 875,000 barrels a day. The company calls these their advantaged assets because, well, they're incredibly profitable and efficient. These two are the core engines driving Exxon's growth right now.
And this quote from the CEO, it just perfectly captures their confidence. You know, while some analysts have been talking about peak oil from these big shale fields, Exxon is basically saying not so fast. They're convinced their technology gives them a super long runway for more growth, and they're even planning to blow past 2.5 million barrels per day after 2030.
But hey, we all know that huge production doesn't automatically mean huge profits, right? The other side of this story, and you could argue it's just as important, is this intense focus on financial discipline and keeping costs way down. And this number is just key. Exxon is reporting $15 billion in what they call structural cost savings. So we're not talking about one-time cuts here. These are permanent reductions in how much it costs them to operate. And get this, they claim that figure is more than the savings of all their major international competitors combined over the same time. That is a staggering claim, and it really shows you how serious they are about efficiency. So, what does all that financial discipline actually mean for investors? Well, here you go. This slide shows the direct result. Over the last 5 years, the company has handed out around $150 billion to its shareholders through dividends and stock buybacks. It's a direct payoff from that lower-cost, higher-return strategy we've been talking about. Okay, so with record production and lean operations, Exxon's present looks incredibly strong. But the big question for a company of this size is always, what's next? Well, the earnings call gave us a really clear window into where they're placing their bets for the future. And you know what? Those bets are all about technology. It looks like they're trying to move beyond their traditional oil and gas business to build whole new, high-growth businesses in things like advanced materials and low-carbon tech. And this isn't just corporate buzzwords either. They pointed to some really specific projects. You've got Proxima, a new line of advanced polymers. They're developing new graphite materials for battery anodes, which we'll get to in a sec. They have a fast-growing carbon capture business, and they've built a new company-wide data platform to speed up how they use AI. They're serious.
Now just check out their battery tech claims for a minute. They're saying their new material can make batteries that charge 30% faster, hold more juice, and last up to 4 times longer. In the booming market for EVs and energy storage, I mean, those are the kinds of improvements that could be absolute game changers. In that carbon capture business, yeah, it's not some little side project. This slide shows they're already under contract to capture and store 9 million metric tons of CO2 per year for other companies. This is a real revenue-generating business that's operating at a massive scale, like right now.
Of course, no plan is perfect, and this one is no exception. So to get the full picture, we've got to look at the headwinds that the company itself is acknowledging.
First, there's always geopolitical risk in key oil-producing regions like Venezuela and the Middle East. Any instability over there could really impact their operations. Second, their basic chemicals business is facing some tough market conditions because of a global oversupply, and that's squeezing their profit margins. And finally, yeah, those future technologies are super promising, but scaling them up to be globally significant businesses, that's going to take a lot of time and a ton of money. So what's the big takeaway here? ExxonMobil is in the middle of a really successful transformation. They're becoming more profitable, more disciplined, and way more tech-focused. And the results in their main business? They're undeniable. But the billion-dollar question is still out there. Can this new, powerful strategy overcome the huge geopolitical and market uncertainties that are going to define the future of energy? That's the bet they're making. And believe me, the world will be watching to see if it pays off.